So for the final video in this section of the course, I'm going to be showing you an example, bringing everything together and showing you those scale-ins and stop loss management as well. So we're here on EURUSD, starting off on the daily chart to get an idea of the overall direction of the market. And it's pretty clear here we can see we've got a demand zone the price is traded into, filling this inefficiency and making this efficient. We have a large imbalance above and the supply zone here. So continuing the daily uptrend, even though we formed a lower high, it's very likely that regardless on which way the market goes, we are first of all going to come and fill into this region. Okay, we've reacted from a demand zone, we are in an uptrend. Even if the market decides to reverse, it's going to go and push through this liquidity first. Okay, it's going to push through this imbalance before it sells off if that's what it decides to do. So at this point, we can scale to the lower time frames. We'll go to the 4 hour first of all. And the 4 hour, as well as the demand zone retest, is showing a lot of breaks of structure. We have a lot of bullish breaks of structure here, 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 and here. Okay, so we can see that this is a nice impulsive move in the market, and it is indeed pushing to the upside. Now, another thing that catches my attention is on the other side of that, this 4 hour supply zone has been retested very nicely. So taking it back to the imbalances and inefficiency, what can we see? Well, we are impulsing to the upside, but it looks here like we've had a break of structure. Okay, higher high, higher low, higher high, lower low, lower high. We have an imbalance below that could bring us into this region here as a general idea before the market moves to the upside. So we're continually following supply and demand back and forth in line with the overall structure, which obviously is bullish in this instance. So we can expect that the market's going to sell down from here. If we now go down to the lower time frames, the 15-minute time frame, we can have a look and see if it's ready to move down yet or if it has any more upside to push through before we do indeed go down. So I'll be looking at this nice refined 15-minute supply zone. If we clear this one for now, we can see that yes, we do have a break of structure here. It's likely the market is going to move down through some of this imbalance. But first of all, I think we're going to have to come and fill this imbalance here, right? Because if we look here, we do have an imbalance into this refined supply zone. So the movement I'd be looking for on EURUSD now is this. I would like to see this push up, fulfill this zone, and then we can look to sell it off in line with this smaller time frame 15-minute structure, which is turned bearish. Okay. So at this point, I'm looking for the possibility of potentially buying this, because if we look at the structure, it does still look bullish. Okay. The higher time frame structure, for example, if we grab this hourly demand zone there, we can see we've had a nice hourly retest and we're pushing up. And while we have seen the structure break since then, I am expecting this region to be filled first. And obviously, after seeing a higher low form, it's very likely that we will. So we are essentially continually following the order flow and just seeing what the market's given us. Is it giving us buys? Is it giving us sells? It switches around a lot. We have a lot of opportunity in the market at all times. So just be dynamic with it. Using the concepts of liquidity and imbalance, you can generally see where the market is likely to head into next for the next bout of movement. And in this case, based on the technicals that we've just spoken about, it is likely that the next movement is going to be a push into this sell zone or this supply zone. So the next course of action is going to be focusing on this current structure. So we've seen a 1 hour demand zone retest. And since then, we've actually seen some bullish breaks of structure. Now, first of all, we had a bullish break of structure here. This indeed could have gave us a buy trade, but I wanted to wait for more confirmation, make sure the trend was on its way to the upside, considering this trade is essentially counter trend against the recent break of structure. But what we have seen is a higher high, a higher low, a higher high once again. And what that gives us is this area here as a bit of an area of interest. Now, as we can see, we do still have some imbalance leading into this point. So I would generally like to see the market come a bit lower. To work out where it's going to go to, we could go down to the 10-minute or the 5-minute time frame and refine the demand zone. So in this example, I'm going to refine the demand zone like this. And then as we can see, if we allow the market to come into this point, if it does tap in, we can then begin looking for our confirmation entry. So the entry for the trade was taken on the 3-minute and 1-minute timeframes. Now, if we go to the 3-minute, first of all, you will see this down move has formed some pretty noticeable structure points, some significant structure points, with the main one for me being just here. So I'm going to plot this structure point on. And now what I'll be looking for is a break of structure to the upside to then pull back down to then buy, okay? Because we have, of course, this demand zone retest. But until this structure breaks, we are essentially still in a downtrend. So allowing the market to play out, we do indeed see that the structure is broken. And from this point, I would then begin looking for my entry, okay? So we have a bullish break of structure confirming that we are ready to move up out of this demand zone. And it is at this point that I switch to the 1 minute time frame to identify a buy zone. Now the buy zone for this trade is going to be this 1 minute refined demand zone here in the low. So if I just clear this off, we can just focus on it as we roll. We have here a 1 minute refined demand zone. What this demand zone allows us to do is put an entry on around the 1.18660 level. 662, I believe, was my entry point. I went in with a very small stop loss of 2 pips, which completely clears the lows. As you can see, 2 pips is a very, very ridiculously tight stop loss. But when you're using precise methods like this, you can easily get it. So in this example, we do have an imbalance leading into this demand zone. As you can see here, we do have this general little formation of equal lows, showing liquidity. And from this point, it is a matter of identifying our target, which, taking it back up to the 10-minute time frame, is going to be around the 1.1900 key level, which is the low of this range. Okay, and then it is simply a matter of allowing the trade to play out. If we let the market do its thing, we're either going to get stopped out or we're going to get kept in. Now, you may ask, why did I opt for a 2 pip stop instead of a 1 pip stop to keep it just beneath this low? The reason I did that was because I was playing safe, and I figured if we do a 2 pip stop, we are going to be situated just underneath this low here as well. Okay, so the very low of the movement, now if we just connect that up, the very low of this previous 10-minute / 5-minute demand zone that we were trading the bounce from is now cleared, right? You can just about see that. So unless we actually surpass this low, we're still safe on the trade. Now, yes, it would have also been possible to go a little bit more aggressive and go with a 1 pip stop, and then you could have got twice the risk reward. But 2 pips for me is good because, as you can see, we are onto a 16R position if the target is fulfilled. So from this point, the trade was fulfilled just there with a nice wick in, secondary tap, and then the market began moving up. And now this is where the scale in and stop loss management really comes into play. Going back to the topics in the previous video of scaling in and moving stops, what we want to do is identify higher highs, and then we can begin looking for scaled in entries and also moving our stops into profit. So the first bullish break of structure is this move here. And from this point, we could be looking for an entry from the lows of this region. So if we went to the 5-minute time frame, potentially even the 3-minute time frame. Okay, this is quite a choppy zone, but let's just say we're looking at around this area. Shift it to the 5-minute. We can be looking for a buy from this zone, right? A demand zone after a higher high has formed in the market. Now, as you can see, much like the rest of the setups we've been doing, we have the liquidity and we have an imbalance ever so slightly into this region. So we have an imbalance, we have liquidity. So when the price comes into this region, we could look to put on a second entry. So let's say our second entry is something like this, targeting that same level. This is where we could scale in. Now, if this forms successfully a higher low, as it has now, we could go ahead and shift the stop losses for both the moves under this higher low. So that would actually bring the stop loss for this move just to there. And this would bring the stop loss to this move just to there. So around 1% profit on this one and just under 1% loss on this one. Now, if the market can successfully make another higher high over this previous one, we can look to scale and then reshift the stop losses again when the market makes a new higher low. So at this point, we could go ahead and move our stops under the next lows, and we could wait now to see if we get a scale in entry. So the next scale in entry would be looking at this region. Now, why is that? Because the same reasons again. We have an imbalance into this point, so we have inefficient pricing after a higher high was formed. So now we have 2 trades running with the potential to add a third scale in, which if we look at doing so with the same stop loss, we could now potentially have quite a large profit running if this is triggered in. So we have now been triggered in on this move. If we wait for a higher high, potentially another scale in entry here based on this as well. So we could see possibly adding a movement from here. I would wait for the higher high first. But yeah, as you can see, that would have been a profitable opportunity as well. So now we have the 3 positions running with the potential for a 4th position, as just mentioned. And a new higher high in the overall swing trend has also been formed. So we could go ahead and move the stop losses for the trade to here now. Allowing the market to play out, we have once again formed a higher low and a higher high. We could move our stop losses once again to this point. So we have 3 positions now with quite large profits running on the stop loss. Now at this point, we could be looking towards potentially this zone as our scale in demand zone, because we do have once again another bullish break of structure here. So possibly looking at this region here for a new scaled in trade. What we could do then is see if we do not get the tap in. If we get a higher high again, as we have done now, we could go ahead and shift our stops to this point and cancel this order for the meantime. And it looks as though trade is now coming to an end and we have been stopped out. So the trade was then stopped out around this point, around halfway to the target. And as we can see, if we just bring it in to measure up, so 1% risk on each position, which overall would never have been more than 1% risk on the whole total position, remember, because we obviously have break-evened these and moved these into profit when we add the next position. So 1% total risk will provide us with a combined profit of 9.1R plus 6R, so 15.1R, plus another 6.6R. So 21.7R from 1% risk. So 21.7% potential could have been pulled out of the market on this movement. So on my personal position, I did mention I only took the 1. So I got 9.2R out of this trade, which obviously is already brilliant. But when you bring in the scale-ins and notice, 20+% just from 1% risk, it really shows the strength of scaling in and managing these stop losses accordingly. So you saw how we managed the stops following the higher lows. And when they finally get triggered out, it's never bad news because we get secured with a lot of profit. And if we don't get triggered out and the trend does continue very nicely, we can then continue on up and fulfill the full target, make a lot of profit on the way up there. But 22 plus R on this movement, no complaints there. So that brings us to the end of this new course chapter. I really hope you've enjoyed it. This is a step-by-step trading system and the trading system that I use every single day in the markets to make my money. I hope you found a lot of value in it, and I hope you can now go away, practice this system, backtest this system, and see some extremely profitable results. So thank you for watching, and I'll see you later.